and you're watching Business Week. One of the world's greatest corporate players, Ron Briley, tells us where he sees the share market going later in the program. But first, the horse float. Tommy Smith hits the stock market boards after more than 30 years as one of the country's top racehorse trainers. The racing industry is a playground for the rich and famous, for prime ministers to top business people. The cost of buying and keeping a racehorse has always meant that only the rich could afford to be owners. But Tommy Smith claims he has a way for small players to get into the sport of kings.
The good oil, inside information, a hot tip from the horse's mouth, stable talk. Call it what you will, the racing industry thrives on it, and there's always plenty for the strappers, jockeys and trainers to think and talk about. Yearling sales, how the horses are running, what the opposition's plans are. In recent weeks, the talk has been about something new. TJ Smith is floating a company to buy and train racehorses.
It'll be one of the greatest things ever happened because I'll be buying more horses and better type of horses. And it'll give the people a great chance to have interest in horses. When they run in the barrier trial, and we haven't, like we did last year, won 7 or 8 barrier trials, I'm going to sell shares in the horses straight away. If anyone wants to have an interest in a horse, they can come along.
Tommy Smith looms large in an industry that is Australia's third biggest. The turnover exceeds $20 billion a year. There are 35,000 racehorses in Australia chasing $106 million prize money. That amount, split between all those horses, gives average winnings of $3,000 a year. Training, with feed and stabling costs included, runs to $10,000 or $15,000 annually.
When they say that racing is the sport of kings, it is not only a sport, but only kings or millionaires can afford it, and they have to go into it with the attitude that if they lose money, that's part and parcel of the game. If they break square, that's a bonus, and if they make money out of it all, well, that's manna from heaven.
Arthur Harris advised Stan Fox, through the 70s, one of Australia's biggest private owners. Harris also helped the Legal Eagles, a lawyers' betting syndicate that made money punting on races across Australia. His view of investing in a trainer's company...
I wouldn't be putting my money in it.
That reaction, because in the racing game, it's not only the punter who's taking a risk. The gamble isn't only in here. From breeding to the winning post, the risks are almost countless. And for the trainer, or any would-be investor in a training company, they start at the annual yearling sales.
And with a great man, makes the road hill.
And prices at the yearling sales are soaring. A recent New Zealand auction saw an average price of over $100,000 a horse, representing an increase of 39% over the previous year. Figures like that make forming a company and having a big bankroll attractive. Tommy Smith has already announced guarantees of $16 million worth of shares for his Tulloch Lodge company, named after his base at Randwick. But prize money isn't keeping pace with sale prices. Despite an increasing number of million-dollar purses, prize money is only growing by 16%, and the chances of picking a winner still slim.
Out of all the yearlings that have been bought in Australasia in a year, which is a very big number, only 40% of them make it to a racetrack. About 30% win a race, and about 20-odd% win a race in town or more, and then about 10 to 12% win group races, which are black type races.
The bookies, the men who make a living calculating the odds more accurately than the punters, are early arrivals at every race meet. But as if the risk and chance of racing were not enough, from day one, from the yearling sales, investors can face other hurdles.
These are auctions, and they're conducted in Sydney, Melbourne, Brisbane and New Zealand. Usually the yearlings are auctioned, the horses at 1 year old, and they're brought in. They haven't been tested, nobody knows how good they are, and people bid on their pedigree and their conformation, hoping to buy a champion.
TJ Smith is unequalled in picking which horses will go into the barrier and cover the distance fastest. For 33 years, until Brian Mayfield-Smith beat him last year, Tommy Smith was Australia's premier trainer.
1982, and Tommy Smith in New Zealand and Australia that year had some 40-odd yearlings knocked down to his name for a capital outlay of $1.8 million. Now, he did a very good job, because of those horses, 47% won a race in the metropolitan area. Now that means Tommy Smith has got some sort of a genius and a good eye for a yearling. But to return to the finances, they cost 1.8 million. To have them trained would cost at least another $1 million. So you're up now for 2.8 million. Those horses, over 4 years of racing, that is through the 83, 84, 85 and 86 season, collectively won $1.1 million in prize money. Out of those 40 horses, one very, very good horse was selected called Alibi, who won $668,000 in prize money and was syndicated as a stallion for $1 million. So that the return now to the owners is 1.9 million. Now that was a very good year. 47% strike rate of winners, a champion, and the receipts back are 1.9 million out of a total outlay of 2.8.
Tulloch Lodge Limited will look like this. The issue, 30 million shares at 40 cents each with a premium of 10 cents for a total capital and reserve of $15 million. The company holds an option to acquire the horse training and bloodstock activities of Tommy Smith, including goodwill. Payment to Smith will total $2.245 million. $2.145 million of that will be for goodwill. Smith will stay with the company as joint managing director for 5 years. Salary $150,000 a year, with a bonus of $35,000 for every $1 million profit. Tulloch Lodge Limited will lease the Kensington base, stables in Melbourne and Brisbane, and has an option to buy 3 rural properties previously owned by Smith's fellow managing director, William Manning. Other directors are lawyer Jim Beattie, vet John Peatfield and Brian Newell. The principal source of income will be from agistment and pre-training charges, training fees, prize money and short-term investment of unused capital. Yearlings worth $3.185 million were purchased last month on behalf of the company. Directors say in the prospectus, to be launched tomorrow, that because bloodstock will be purchased in the main at yearling sales, evaluation and assessment of initial purchases is likely to take at least 18 to 24 months. Consequently, income from bloodstock trading in the first 2 years is likely to be minimal.
If it goes and people follow, it pours a lot more interest and money into the racing game, which could only do the racing game good. But the end result of whether it really does do the racing game good is if it's successful, and you won't know that till about 2 or 3 years down the track.
In his late 60s, Tommy Smith is doing something new in racing, perhaps starting a trend. Some aspects of his move still to be made clear.
You as an investor have bought shares, and with the money that you've paid for shares, Tulloch Lodge has purchased certain horses, and now the horses are ready to win. Are you as a shareholder in Tulloch Lodge and in the horses entitled to know whether your horse is going to win on a particular day? I would say that you should be entitled to that information.
You see that happening though?
Well, I can see that there's going to be a lot of practical difficulties on that, because how could you, for instance, if there were thousands of shareholders, how could you contact every one of them on race morning to let them know that their horse was primed up and ready to win? It'd be very hard.
Gamblers putting their money through the bookies and the tab, or investors taking the plunge on the stock exchange. Racing, it would seem, will always remain the four-legged lottery.
When you get into a venture which is involved in racing, just remember that today you might have a champion, tomorrow you've got nothing. And that's by virtue of the fact of injury or anything like that. So that's, I think, for the unwary, that is something you should really consider before you get into it.
The horse float. Tommy Smith punts on a new direction for his Tulloch Lodge. That report from Nigel McCarthy. After the break, Industrial Equities Chairman Ron Briley talks about his plans for growth and his predictions on where the Australian share market and economy are heading.